Greetings, members one and all of the Salivation Nation. There is no safe haven. Or so we might be led to believe. But there is hope. What you're looking at right here is as of the recording of this video, are the precious metals prices. They are upside down. It has been a wild ride, to say the very least, in the world of precious metals, but also in the markets in general. We have seen pretty much everything go down from the stock market day after day, with kill switches on the market to prevent them from sliding ever further from essentially a crash. We're so close to levels of a continued bull market. It would not be surprised if we do see a crash the way things are going in the last week or so. But why are precious metals moving in this direction? It's a world turned upside down. The gold to silver ratio is at widening, ever so increasing, and all the precious metals have taken a beating, but especially silver and the platinum group metals. Gold is actually holding on fairly strong here. But we're going to explore some of what's been happening here, and we covered in my last night's market watch, as the markets opened up, there was news breaking literally minute by minute, and we're going to cover some of this and why there is no safe haven, at least in the price reflection for the precious metals here. Central banks slash rates to fight the COVID-19, but why is gold priced below $1,500 and silver, and the PGMs have plummeted? This is from Kitco News, a piece by Anna Golubova. Central banks around the world have been very busy announcing measures to soften the impact of COVID-19 on their economies. News is literally breaking by the hour on this. But global stocks continue sell-offs, dragging precious metals down along with them. And Bitcoin is suffering as well. Here's some of the most recent policy actions by the central banks around the world. The Fed once again tried to positively surprise the markets when it announced its second emergency cut in 2 weeks on Sunday afternoon. The central bank cut rates by 100 basis points, bringing down the benchmark rates to near zero. It's actually between 0 and 0.25. Also, the Fed said it will be launching a quantitative easing program, boosting its bond holdings by at least $700 billion. Other measures introduced by the Fed included reducing reserve requirement ratios to 0%. Banks are required to have 10% of their holdings in cash. That has now gone away. This allows the banks to borrow the discount window for 90 days and cooperating with other banks to make sure U.S. dollars are readily available with swap lines. That includes overseas. They want to keep those dollars flowing. It's essentially a blank check. There's a lot that could go wrong with this, and then the quantitative easing and everything like that as well makes me nervous. I'm going to call this quantitative easing 4. 3.5 occurred right up until 4, and the 3.5, quantitative easing 3.5, is the loans the banks were given with money injected by the Federal Reserve and what's called repurchase agreements between banks that are scraping for cash at this point, and they're throwing more cash out. It is crazy. But let's take a look what some of these other banks are doing. The Bank of Japan held its interest rate steady on Monday, but doubled its net purchases of exchange-traded funds to 12 trillion yen. The central bank also announced a lending program to help struggling businesses during the COVID-19 outbreak. The announcement was also a surprise, as it was originally scheduled for Thursday. The People's Bank of China. China's central bank pumped more cash into the financial system on Monday, injecting 100 billion yuan via the one-year medium-term lending facility. The central bank kept rates unchanged at 3.15%. You may remember I covered it on this channel when we first talked about COVID-19, that China was they had been doing this, and they were doing it on the outbreak in China when it was an epidemic before it became a pandemic. The New Zealand Reserve Bank backed an emergency rate cut on Monday, slashing its interest rate by 75 basis points down to 0.25. So they're basically where we're at. It also assured the market that it will be keeping rates this low for at least 1 year. The Bank of Korea and South Korea proceeded with a 50 basis point cut on Monday, lowering its rate down to 0.75. The Royal Bank of Australia said it would continue to support the economy with lower repurchase operations as it injected a record $8.8 billion, which is $5.4 billion of US dollars of liquidity into the market on Friday. The Bank of Canada slashed rates by 50 basis points in an emergency cut on Friday, bringing its interest rate down to 0.75%. This is the second emergency cut for the Bank of Canada in just 2 weeks. The Bank of Sri Lanka cut its rate by 25 basis points, lowering it to 7.25% on Monday. These are important to go through, folks, because this is going to help you bring some perspective and maybe even some hope as we get to the end of this. And as I hope, with the title of this video being "There is no safe haven." Turkey's central bank responded by announcing a cut to its remuneration rates required on reserves in liras starting March 20th, bringing it down from 10% to 8%. The UK lowered rates by 50 basis points last week at the Bank of England. The new governor, Andrew Bailey, assured the country that he will be delivering prompt action again. The Bank of Israel will be purchasing government bonds purchases for the first time since 2009. On top of that, India said it would cut rates in April, while Kuwait cut rates by 100 basis points on Monday, and the United Arab Emirates lowered its rate down by 75 basis points. So all these other central banks are taking our lead here. Low interest rates are usually great for precious metals, but the slate of rate cuts and liquidity injections have not reassured the markets, with Goldman Sachs warning its clients of the S&P 500 might not bottom until it hits 2,000. The coronavirus has created unprecedented financial and societal disruption, Goldman's U.S. chief equity strategist David Kostin wrote in a note. The combination of thin liquidity, high uncertainty, and positioning could cause the S&P 500 to fall below our 2450 base case estimate of fair value and closer to a trough of 2,000. Precious metals continue to plummet Monday, with gold, silver, and platinum and palladium all in a free fall, but especially silver, platinum, and palladium. Gold is holding its own, with all things considered. More on that in a moment. Gold COMEX April futures were last down nearly 4% on the day, trading at 1460.90. May silver futures down a massive 15%, last trading at 1232. There was a YouTuber I've got to shout out. He hasn't commented in a while. His name is Keith High. He predicted $12 silver, and look at that, we're in the 12s. April's platinum down nearly 14% at $651.80. Crazy. If you can find deals on platinum, and people they're taking it up. I wish I would have waited a couple days. I thought I got a great deal on a platinum. If I would have waited 2 days, I would have got it for $100 cheaper, or actually $500. I don't know. $100 and $200 is hard to tell. There's those big movements in price. It's insane. June palladium was down 2.69% at $14.68, on parity with gold for a while. Jim Wyckoff from Kitco said the precious metals are collapsing because of the sell what you can panic in the markets. This is the paper markets. There's a disconnect, and I still need to read that article that Pamela Rice sent me about the disconnect between the paper and the physical markets, and there's some hope there. Without me even really looking into that, I've got some guesses on what's going on there, which is going to give us hope about this no safe haven thing that we're seeing on the surface here. Trader and investor confidence appears to be going from bad to worse to start the trading week, as over the weekend, U.S. non-essential commerce began to shut down amid the pandemic. Investors have been largely selling off gold to raise cash to cover losses elsewhere. It's exactly what's happening, and especially in the silver markets, the ETFs. Silver is trading like a commodity, and they're wanting to get out of it as quickly as possible. Gold positioning continues to be liquidated aggressively as rebalancing and margin calls prompt funds to sell the yellow metal, seeing prices post the largest weekly decline since 1983. TD Securities commodity strategist wrote on Monday, the current gold market sell-off is similar to what happened during the financial crisis, when prices dropped for a period of over 3 months along with collapsing equity valuations, as increased volatility and margin calls forced levered investors to sell to provide liquidity. Yes, indeed. So this is why the prices go down. This is in some way nothing new. There's also fear that central banks around the world might be forced to sell some of their gold reserves to help their economies with the COVID-19 related slowdown. Phil Flynn, senior market analyst at Price Futures Group, told Kidco News on Monday, if there's any support coming into the stock market, there might be a bid in gold, but right now people are running scared, so they're afraid to step in. On top of that, precious metals that have exposure to the industrial side, like silver, platinum, and palladium, could feel the most pain during times like these, and boy, are they ever. Indeed, a recessionary demand environment could still force palladium down another $500 to $600 to around $1,200 an ounce as supply demand balances loosened from previous record tightness. Furthermore, the massive sell-offs across the precious metals was enough to shift momentum signals into a net short territory on the cards for gold should prices close below 1484 on the day. While both silver and platinum are now short on all cylinders, the palladium selling is also underway, the strategist wrote. Let's get back here. Let's talk about this. Let's parse this and bring this apart. And I know I've missed some of these videos. There's been videos all day. I have to work. I have a full-time job that I've got to tend to, and I've actually missed some news. But I wanted to post this video because I had these thoughts earlier about, well, there seems to be no safe haven. Bitcoin is down massively. Precious metals are down. Treasuries, everything is down. Where can we turn to? Well, these prices that you see before you, you might as well just ignore them. Yes, I said it, and I know it's hard to ignore what you see before you, but mark my words, folks, they are safe havens, especially gold. In fact, I think it still holds true for silver, but let me explain. Because even in a world where the prices are going crazy, the value remains. Make no mistake, gold and silver's intrinsic value will go on, even in times like this when when they're down and the price is what it is. Go try to find silver for 69 cents over spot anywhere. You might be able to find someplace. But if you find silver now for $13.70 for an ounce, you're going to be hard pressed. Even though the spot prices went down on silver, finding a deal where the price actually reflects that when you actually go to buy the physical has been a challenge as of late. Now, there's various different theories as to why, and that I'm hoping we'll be able to parse out fully if we can get a hold of some bullion dealers out there. I've got some feelers out for them. But even gold's premiums are going up, and gold has taken less of a hit than any of the metals, at least from yesterday, but it took a pretty big hit. But gold is reacting, but it is still a safe haven asset. But it's only down 1% on the day. It's taken a big hit recently. But gold is the ultimate hedge, and it's weathered the storm better than these other metals have by far. But I believe silver is unique in this particular scenario because it's taking a hit. It's acting, especially between palladium and platinum. It's almost down the exact percentage, just over 12%. In fact, it took a little bit less of a hit compared to the other two metals. We can parse that even further, but there's no need to. It's reacting as a commodity at this stage, and people are running scared out of it in the paper markets. What's happening in the physical markets? There's just as many there's a lot, maybe not just as many, but there's a lot of people trying to buy it. There's a lot of people trying to buy silver right now because they see it as an opportunity. and they're trying to get it as close to spot as possible, trying to find the deals out there, and they're willing even to pay the higher premiums because they see what's down the pike. And what is down the pike? Some sort of normalization of the reality, of the new reality that will set in after this coronavirus thing subsides. I believe we're going to head into recession. I don't think there's any escaping it right now. I think the damage has been done. When the dust settles, we will find that we are in a recession at the very least. And what's going to happen in the tail end of this is what has happened before. The thing that makes this different is that all the sectors of the economy being hit hard and being hit very quickly. And will we recover out of it? I believe we will. It may take some time, but I think we're going to see a recession first. And coming out of it, I think the prices for gold and silver, and maybe even the rest of these metals too, will rebound in such a way that they will normalize to where they were before this present crisis has occurred, to where we are. But I think they could even rise, and I do believe we may even see a narrowing of the gold to silver ratio, at least to a level that we were at, to where I discussed, predicted maybe a new normal of around 65 to 70 to 1. We'll find out, and we'll see how that plays out. But I believe that this new demand for precious metals, especially silver, people seeing it as an opportunity, is what's going to be the catalyst to make that ratio narrow some. But make no mistake, gold and silver, but I believe especially gold, is a safe haven. I think gold is proving itself even in this crisis, in this very unique way. It's proving itself. Even though you see those numbers going down, I believe it's proving itself. Silver, not so much right now. I think it may take a while, but I think there's still some hope in that area. But yes, there's no safe haven, at least what it appears to be on the surface here. But in the long run, there is a safe haven. What's the worst thing you can do now? Sell your silver. Sell your gold. Sell anything that's down. Don't do it. Hold on to your silver. Hold on to your gold, platinum and palladium. And if you can find good deals on any of these metals, now is the time to buy. If you're uncomfortable paying these higher premiums, don't buy. Wait for the opportunity that's right for you and your budget. And obviously, it goes without saying, but be very careful out there. And, well, this goes with saying, be very careful out there with this outbreak. Heed the advice of the officials out there from the CDC. At this point, it is getting serious as far as the contagion factor of the virus. So please do take the advice of the elected and appointed officials on this. The quicker we can get through this, the quicker we can get out of it. I pray for everybody's safety and health during this. And remember, the safe haven of precious metals remains intact. But there's even a bigger haven of safety, and that is through prayer and through God. So we pray for everybody's safety and through all this. And so post your thoughts below. Would like to extend a multitude of gratitude you all for watching, and encourage you to please rate, share, comment, and subscribe.